Ladies and gentlemen, good day, and welcome to the NDR Auto Components Limited Q1 FY26 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishabh Barar from CDR India. Thank you, and over to you, sir.
Good day, everyone, and a warm welcome to all of you participating in the Q1 FY26 earnings conference call of NDR Auto Components Limited. We have with us today on this call Mr. Pranav Rilan, Whole-Time Director, Mr. Vikram Krishan Rathi, CFO and Vice President, Mr. Rakesh Rustagi, GM, Finance and Accounts, and Mr. Rajat Bhandari, Executive Director and Company Secretary, along with other members of the senior management team. Before we begin, I would like to mention that some statements made in today's discussion may be forward-looking in nature and are subject to risks and uncertainties. A statement in this regard is available in the Q1 FY26 earnings presentation shared with you earlier. We will start this call with opening remarks from the management, following which we will have an interactive question and answer session. I now request Mr. Pranav Rilan to share some perspectives with you with regard to the operations and outlook for the business. Over to you, sir.
Good day, everyone, and a warm welcome to our Q1 FY26 conference call. Let me start by quickly going through our financial performance for the quarter under review. Q1 FY26 total income stood at rupees 185.81 crores, a growth of 7.97%. EBITDA at 20.46 crores, a growth of 16.98%. EBITDA margins at 11.01%, and PAT for Q1 FY26 at rupees 13.6 crores, which is higher by 17.87% as compared to the corresponding quarter last year. Our continued progressive performance is driven by consistently increasing component of value addition and disruption in our portfolio, strong execution, and enhanced operational efficiencies. We are encouraged by our performance, which was achieved despite unanticipated environmental challenges. Maruti Suzuki, as you are aware, has deferred the production of e-Vitara. This resulted in a delay of our production dispatch schedules too. Lower offtake by Kia too added to some delays. In addition, our sunshade orders, which we anticipated to commence in full swing this quarter, are ramping up. We see all these aberrations though and believe the situation will hopefully normalize by the second half of the current fiscal year. The Board of Directors has approved the setting up of a metal frames and seat covers facility at Anandpur to cater to new business from Kia. The proposed facility will manufacture metal frames, including seat frames, as well as seat covers, namely PU, PVC, fabric, and leather, stitched and pre-fitted. We will invest rupees 27.29 crores over the next 2 financial years. Production is expected to commence Q2 2026. This initiative helps us to further deepen our already strong relations with Kia. Our outlook remains strong. We expect our sunshade and ambient lighting to contribute meaningfully going forward. We're particularly excited about the product rollout from our Hayati Kalanpur joint venture. It's something we believe will open up several new opportunities for us. All in all, we're happy with the progress we've made in the first quarter of the financial year. Our focus remains clear. We're pushing hard on bringing innovative, differentiated products that increase the value we add to every vehicle. At the same time, we're looking to deepen and expand engagements with OEMs so that we stay ahead and keep building stronger partnerships. We will now be happy to discuss any thoughts or questions you may have.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on the touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Jatin Chawla from RTL Investments. Please go ahead.
Yeah, hi. Good afternoon, and thanks for the opportunity. My first question is on your results. So when I look at this quarter, your gross margins have improved almost like 200 basis points on a quarter-on-quarter basis and almost 400 basis points on a YOY basis. So what is really driving this, strong margin expansion?
So we've done some cost-cutting activities, and that's been driving it. In addition to that, our model mix in terms of our gross margin has been favorable. So artificial leather hasn't been sold as much as trim, as much as fabric. That is driving this margin expansion.
Got it. And on the other expenses side, we have seen a significant increase there again from the previous quarter, from 20.5 crores to 23 crores. So what's driving that?
So we've had Kia has started production, our shades have started production, and our e-Vitara has started production, but the ramp-ups haven't happened fully. So that is driving this increase in other expenses.
So would it be fair to assume that as these models kind of ramp up to their anticipated volumes, at an EBITDA margin level, we should see some improvement?
We should be at a similar level.
Okay, got it. On the second question on the Kia plant, the Anantapur plant. So you mentioned in the annexure that this order, you're setting up frame 50,000 sets for a 5-seater car and seat cover 78,000 sets for a 7-seater car. So you have two separate orders, and one order is only for frames and one order is only for seat covers. That is how we should think about it?
So it's for one vehicle. We've received the first 2 rows for the frame. Now it's a 3-row vehicle, and we haven't received an order for the 3rd row. And that's why we've written 5-seater car. And
okay.
7-seater, yeah.
So it's one single model, it's just that you have the trim order for all the 3 rows and frame order for just the first 2 rows.
Exactly.
Got it. And with this 27 crore or 27.3 crore investment, what's the sort of revenue potential that this plant will have?
So the peak revenue should be about 80 to 100 crores. It's subject to how the vehicle ramps up.
Got it. So this 80 to 100 crore revenue potential you are saying for this one model where you have orders already in hand?
Yes.
Got it. Any update on the total order book now? I think you've been sharing this number on the past calls. With this new order that has come in, how do you see your order book?
So you can remove the Kia existing business, the shades and the e-Vitara, because the ramp-ups have started. In addition to that, we've got a new Kia order. So over and above that should, so our order book should be about 300 to 350 crores.
Got it. And this quarter on the revenue side for the company, there has been a very sharp fall in Maruti's production volumes that I see from the March quarter to the June quarter. However, for you, the revenue decline is very small. So what is really driving this, sharp outperformance compared to Maruti?
So all our new vehicles have started, our Kia has started, our shades have started, and our e-Vitara has started. So that has contributed to the increase in revenue.
And Kia...
Sorry to interrupt, Mr. Chawla. Sorry, sir. Please go ahead. Management.
So our Kia business has started, our shade business has started, and our e-Vitara has started. So that is contributing to the increase in our revenue. In addition, you can see the Maruti exports have done quite well. So that has led to our increase in revenue.
Got it. Thanks. I will go back to the queue.
Thank you, sir. Next question is from the line of Tanmay Javeri from Finterest Capital. Please go ahead.
Hello, sir. Good afternoon. So I have this one question, like the inventory which I'm making right now.
Sorry to interrupt, Mr. Javeri. Your voice is not clear. Please use your handset.
Am I audible?
Yes, please go ahead.
So my question was the investment which you are making right now of 27 crores. So why are we doing that under a subsidiary and not in a main company?
So in order to get some benefits, we're setting up a new company.
Okay. And can you give revenue guidance for this year and next financial year?
Sorry?
Revenue guidance, like what revenue are we looking forward by this financial year?
So we don't want to give a revenue guidance for the current financial year, subject to how the market behaves and how the new order book plays out.
Okay, no worries. Thank you so much.
Thank you. Next question is from the line of Hitesh Goel from Origin Capital. Please go ahead.
Yeah, thanks for taking my question. My question is on the order book. So what is the updated order book now? I think last quarter you had given 1,100-1,200 crores as order book. So with this 100 crores, is there addition in the order book, or because Syros is not doing that well, we have subtracted that from our order?
So 1,100-1,200 crores is our revenue potential expected in the 2 years. So if you remove the Kia Syros, the Shade, and the e-Vitara, the ramp-ups are still happening. In addition to that, there should be another 300 to 350 crores.
So 350 crores is coming from where? Because you said Kia new order is 100 crores, right?
So we've got Kia business, we've got the Seat and Third project, we've got some new Maruti business that we've got this before, we've got some BIW business. So that is an additional 3 to 350 crores.
So in Maruti, you've got additional business apart from the 2 EVs, which was already part of the order book, right?
So no, including one of the EVs, is about 300 to 350 crores.
Okay. And basically this BIW project is starting from when?
So we have a BIW project starting from Q3.
And on the e-Vitara side, basically, how earlier targets for Maruti was very high, right? But because of this rare earth metal shortage, do you think what is the target that Maruti is sharing now?
So Maruti's shared that they're going to make 65,000 this year. If this is the target that they gave initially, they will probably just make it the whole target in the second half of the year.
65,000 vehicles on exports, right?
Yes.
Okay. And you set up this facility in Aurangabad is only for Kia, or the plant capacity could be used for other OEMs in future?
So the Anandpur facility is for the Kia.
So there's no, is there a contract with Kia that it can be only used with Kia, or you can use it for other OEMs in future?
We can use it for other OEMs, but it's very close to the Kia plant.
Okay. Thank you.
Thank you. Next question is from the line of Hemant, an individual investor. Please go ahead.
So thank you for providing me the opportunity. Sir, wanted to ask something. We had previously guided for the revenue of FY26. I think 250 to 3.
Sorry to interrupt, Mr. Hemant. Your voice is not clear. It is breaking.
Hello, am I audible now?
Yes, please go ahead.
So thanks. Just wanted to ask you one thing. We had previously guided in one of our earlier calls that for FY26 we'll be doing a revenue of 250 to 300 crores extra, apart from the FY25 numbers. So basically, FY25 we have closed around 700 crores. So the ideal revenue, according to our earlier guidance, should be in the vicinity of 1,000 crores. Okay. So are we kind of sticking to the guidance, or we are some sort of lowering it given the subdued performance in Q1?
So we don't want to give a guidance for the current revenue. It's subject to how the vehicles perform and how the market performs.
So, sir, given the subdued performance in Q1, so, sir, just wanted to ask you, are we some sort of, lowering it? Are we anticipating a further slowdown?
So it'll be slightly lower than what we had suggested. Exact numbers is something we don't like to suggest.
can I, sir, expect it to be the lower end of the previous range?
So again, we don't want to give a guidance. It's subject to how the market behaves and how the model behaves.
And sir, the long-term guidance of 3,000 crores is still intact or right?
The long-term guidance is intact.
Okay, sir. Okay. Thank you.
Thank you. Before we move to the next question, a reminder to the participants to ask a question. You may press star and one. Next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Namaskar, sir, and thank you for this opportunity. Hope I'm audible, sir.
Yes, please go ahead.
Yes, sir. Sir, firstly, for the CapEx part. Hello.
Yes, please go ahead, sir.
Yeah. Sir, firstly, on the CapEx front, sir, what have you outlined in terms of the CapEx for the current financial year?
50 to 50 crores.
Sir, your voice is fumbled. Come again.
It should be approximately 40 to 50 crores.
40 to 50 crores. And sir, we have worked out our strategy of de-risking the client concentration especially from Maruti. So going ahead, what should be the revenue mix Maruti and ex of Maruti for this financial year and the next year with the type of agreements which we have currently done?
So Maruti will always be our biggest customer. The percentage mix I don't have offhand. I will share that with you.
Sir, when we look at the P&L part for Q1Q basis, we have seen the other expenses rising from say 20 crore, 60 lakh to 23 crore, whereas the commensurate revenue is lower. So what explains this Q1Q increase of other expenses by 8 to 10%?
So we've actually had new projects. We've established them. We've added new capacities for the Kia, for the Shade and the e-Vitara, and the ramp-ups are still happening.
Okay, so these costs are not absorbed. That is what the reason?
So our production has started. Our capacity utilization isn't what we expected it to be.
Sir, come again. I think your voice is not very clear.
Our production has started for our new projects. Our capacities are utilized the way it was expected.
Right. Sir, and when we look at this setting up of our office, this will be the rent agreement we are doing for the period, or what exactly are we investing is 11.25 crore?
So we are looking to buy a new office in Aerocity in Delhi. So that is what it's for.
Right, sir. And sir, taking currently into the commentary especially from Maruti and the decline in the production number for the month of July also, what is the current program and the program schedule they have for the products which are being supplied by us? How is the schedule with there, or are you also experiencing any downtrend or any revision in the offtake?
So there is some sort of slowdown happening. Let's see how the market plays out.
Sir, I missed the last point.
Let's see how the market plays out.
Okay. Fine, sir. I think there's an issue with the quality of sound, sir. Anyway, thank you and all the best to the person.
Thank you.
Thank you. Next question is from the line of Samrat Jadhav from Prosperity Wealth Advisors. Please go ahead.
Hi, good afternoon, and congratulations for a good set of numbers. I have three questions. Could you share some current and expected contribution from the sunshade and ambient lighting segments over next 2 to 3 quarters this financial year?
So sunshade.
Yeah, sorry.
So sunshade has already started production. the number, let's see how the market plays out. Ambient lighting production is in Q2 or Q3 of FY27, or no, sorry, of FY28. So let's see how that plays out.
Okay. And Sunshade?
Sunshade has just started. The order book was about 40 crores. So as the ramp ups and the take rates increase, it should play out like that.
Okay. And what is the expected revenue potential from the new Anandpur facility for Kia once fully operational?
About 80 to 100 crores.
Oh, great. And what proportion of our margin expansion which happened came from premium content versus the efficiency improvements?
So most of the margin expansion has happened because of efficiency improvements. Very little has happened because of premium.
Okay. Nothing added from the premium content?
No.
Okay. Okay. Thank you.
Thank you. Next question is from the line of Jatin Chawla from RTL Investments. Please go ahead.
Yeah, thanks for the opportunity again. Just one comment before I ask the questions. I think the quality of the audio today is poor. Very difficult to understand what you're saying throughout the call. But yeah, let me still go ahead with the questions. You said that, Kia, Shades and e-Vitara have all started production, and hence your revenue growth was better than, what Maruti saw. So combine these three, what is the ballpark revenue number for the quarter?
So they've all probably started. It's probably been about 10 crores at most.
At most 10 crores. And potentially they can be on a quarterly basis, what, 20-25 crores?
No, I think the total order size between the three of them should have been about 2 to 250 crores. So they can potentially go to 40 to 50 crores or 60 crores. Yeah.
But Kia looks unlikely now, right? That the model is not doing well. So unlikely that will hit the order book run rate.
Yeah, let's see how the model behaves. No comments on that.
Sure. No worries. This Maruti e-Vitara, the comment that you made in the presentation about the production, that is just this quarter's issue, right? For the full year, you don't see an issue. You're still expecting them to do 65,000 units for the full year.
Yes, exactly.
Got it. Any visibility you are seeing on the festive season schedules? Because for August, September now, festive season production would have started. So how are the two key OEMs talking about their festive season schedule?
So there is a slight slowdown happening at the moment. So let's see how the market plays out.
And there were some regulatory changes also that were expected this year. So when is that likely, and what sort of content increase should happen because of that?
There are some regulatory changes that have started happening, but they will increase our content by a little bit, which should be maybe 5 to 10% of the frame business. So nothing major.
Got it. Thanks for the opportunity.
Thank you. Participants, to ask a question, you may press star and 1. Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on their touchtone telephone. Next question is from the line of Hitesh Goel from Origin Capital. Please go ahead.
Thanks for taking my question again. Pranav, just a question on Toyota's, the Aurangabad plant that you have. Is the plant expected to start on time, which is FY28, which we had discussed, which we had told in the last con call? And also, your share of business, what will be your share of business in that plant?
So at the moment, we are bidding for new products and the seating business also. The expected timelines are FY29, not FY28.
Okay, second half of FY29 or first half of 29?
Second half of FY29.
And I think, what would be the capacity of the plant?
We've just acquired land right now. We are looking to get some new RFQs right now. So as and when that happens and that converts into business, we'll let you know.
Okay. Okay. Thank you.
Thank you. Next question is from the line of Hemant, an individual investor. Please go ahead.
Thank you for providing me the opportunity again. I missed the initial, the opening remarks. So, you had mentioned that the slowdown in the current quarter, that is Q1, it was primarily attributed to the deferment of the production of e-Vitara. Okay. And what were the other reasons, sir? And when can we expect a turnaround?
The cup and the shade has also started maybe in July, August. Let's hope that second half of this year should be better.
So we are again anticipating a subdued Q2, right, sir?
It comes down to how the market behaves.
Okay, sir. Okay.
Thank you. Management team, the audio is sounding muffled. Can you please come a little closer, sir?
Yeah. This is okay?
Yes, sir. This is fine. Next question is from the line of Saket Kapoor from Kapoor & Co. Please go ahead.
Yeah. Sir, what kind of incremental revenue we are expecting from the new client engagement that we have done over the last 1.5 or 2 years that will now start attributing? And also, since Maruti is the largest revenue contributor, the other players like Kia and all, how are they? Are they also facing the same challenge in the market, or their volumes are very low in comparable to the size of Maruti? So what is their feedback and the products which we are manufacturing for them? How is their deliverables lined up in terms of the utilization capacities going ahead?
So Maruti, sorry, I didn't understand the question. Can you repeat again?
My first question is, what are the revenue growth which we are anticipating from the current year? How much is attributed to the new business that we have garnered over the last 1.5 years, where we have made investment? Now we will start getting the revenue from the new products.
So our 2-year with our existing order book and all the new businesses that we've acquired, our 2-year total revenue should be somewhere around 1,100 to 1,200 crores.
Sir, I am missing your point. Come again.
So our existing order book and all the new businesses we've acquired, our 2-year top line number should be around 1,100 to 1,200 crores.
Okay. So 1,100 to 1,200 crores we will be achieving in which year?
2 years from now. That should be the number we should be achieving.
Okay. My question was that for this year, are we anticipating any increase in business share or the wallet share from the new customer engagement which we have done earlier? That is my question. And are the other smaller players also feeling the same heat as is the case with Maruti, or it is the size of Maruti which is wherein they are unable to grow at the same pace, and smaller players and others are making more inroads?
No. Our share is the same. We probably only expanded our market share. So we've done quite well. The market has slowed down slightly, but that should also normalize in the next maybe 1 or 2 quarters.
Right, sir. Thank you, sir.
Thank you. Next question is from the line of Tanmay Jhaveri from Finterest Capital. Please go ahead.
Hello, sir. So I want to know the utilization rates of our current facilities.
It should be approximately 80 to 85%.
And what is the maximum limit that we can reach? Like, is it 80-85 is the max?
So we have some more room in our capacities.
Okay. And for the new plant that which you have set up, so what's the rate for that, and by when can we expect the peak manufacturing from that plant?
So I think that plant starts production in 1 year. So peak production should be maybe 2 years from 1 year from SOP, so 2 years from now.
Oh, okay. And I have one more question. So, you mentioned that we are planning around 20 crores more CapEx in the next 1 or 2 years, like each year, 20 crores. So could you throw some colors on what CapEx we are doing, like in what regards, and how much revenue can we expect from that CapEx?
So we're doing about 40 to 50 crores this year. That is for the seat insert project and all the new programs that we've got. In addition to that, we've got land in Aurangabad. So that is where the money's gone.
Okay. Thank you so much, sir. All the best.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one. As there are no further questions from the participants, I would now like to hand the conference over to the management for the closing comments.
Thank you for your time and participation. We continue to be optimistic about the opportunities before us and look forward to sharing these with you as we move forward. Should you need any input or clarification, please write in to us or our investor relation partner, CDR India.
Thank you, sir. On behalf of NDR Auto Components Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.